Welcome back. Still tuned in to Midcap Radar. Supriya Lifescience, that's the next management on the show. Company reported a strong set of Q2 numbers. EBITDA margins and revenues came in healthy. The growth was also very strong. The stock is high by 7% as we speak. To discuss this and more, we have Saloni Wagh, the MD of Supriya Lifesciences, joining in now. Saloni, good afternoon. Festive greetings to you and everyone at Supriya Lifesciences. It's been a strong set for you this quarter. The revenue growth in first half is 33%. It's been much better than the guidance that you'd given earlier of 22 to 23%. Margins at 39%. Will you be able to do better than your guidance in terms of revenue growth this year? And what is the margin number you're looking at?
So yes, definitely in terms of revenue, we have always said that we are going to grow upwards of 22% year on year. And that's the kind of similar trend I would also like to, give moving forward, that you will see good revenue growth happening in the second half of the year as well. As far as margins are concerned, initially we had given a guidance of 28 to 30%. However, we have done much better than that. But margin quarter on quarter is a pure function of the product mix and the geographic mix. So we expect a slight dilution in the margin in the next 2 quarters. However, I would like to say here that in terms of the absolute EBITDA and absolute PAT, this is going to be our best year so far.
Okay, Saloni, just to reiterate those numbers, H1 revenue growth was 33%. You're saying that at this point of time, you're continuing to maintain your revenue growth guidance of around 22 to 23%. That implies that there could be a slight moderation as far as revenues are concerned in the second half. And EBITDA margin, as far as H1 was concerned, was close to 45%. Second half, where will EBITDA margin come to?
So for H1, the EBITDA margins are actually closer to 40%, not 45%. In the second half of the year, what will happen is we are launching some of our new products in Q3 and Q4. And when you launch a new product, typically they will get traction first in the semi-regulated markets where the margins would not be as high as in the regulated markets. So that's one of the reasons why we are expecting a slight margin dilution. We are expecting for the full year, we would be somewhere between that 32 to 34% for the annualized basis. However, the margin, the EBITDA and the PAT in absolute terms would be the highest, what we have done so far.
Okay, all right. So the margin calculation would suggest that it's lower, but the absolute number would be one of the highest that you've seen in FY25. Saloni, some of the top markets for the company are Europe, Latin America. Can you give us a sense of how exports did this year, this quarter? What was the growth? And we've been talking about Red Sea issues, freight issues. Is that something which is impacting exports for you?
So as a company, we have always focused on exports. If you look at our revenue today also, almost 83% of the total revenue is coming in from exports. If you compare that with the last quarter, it was about 81%. So there also we have seen growth in exports. In this 83%, also over 50% for us is coming from the more regulated markets. Which has been our focus. Definitely Latin American markets have contributed really well for this quarter's number. It has gone up almost from 9% last quarter to almost 19% this quarter, which we have been guiding, in our past commentary as well, that it is picking up, the business is picking up in Brazil and those other markets post the registration. So we expect a similar kind of trend moving forward, that sales will be generated more from the regulated markets. Of course, the Red Sea issue has certain impact on the timelines of the shipments. Here and there, we are seeing a lot of delays in imports as well as our export consignments. The freight costs have gone up slightly, but we continue to do our normal course of business. We don't see it as a major impacting, factor for our revenues or our margin moving forward.
Saloni, quickly, we are running short of time. Coming to the CMO, CDMO space, very recently you had announced that, you had won a contract with a European supplier where you would be the sole API supplier. Give us details of that particular contract, what molecule is this? And secondly, you said you're also in talks with 2 other suppliers. So when can that fructify? The earlier contract, you said you could expect to see revenues of close to 60 crores a year. What will be the size of these contracts?
So for the one which we have already signed, it's with a European company called DSM Firmenich. It's an exclusive supply contract of a vitamin product where we'll be their exclusive suppliers from India. And this will add at least 60 crores at its peak. It will take 2 years for it to reach the peak volume. But from FY27, you can see at least 60 crore revenue addition to our top line. We've already started supply to them because it's a vitamin product. It goes in feed, food and pharma. So we have already started some supply for the feed and food market. But once the regulatory approvals come in for the pharma, you will see the full impact of the sales from this particular contract. It's a 10-year contract. So we have a good visibility of this, and there is always a potential chance that once this project is done, we'll get more such vitamin products from this company. As far as the other two are concerned, we have already signed the initial agreements with them, and you will see the commercial implications from these contracts coming in the next financial years. All in all, we anticipate the CMO to contribute approximately 20% of the revenue by FY27.
Okay. All right, Saloni, always a pleasure speaking with you. Thank you so much for joining in today and giving us all those insights. So that's the word coming in from Supriya Lifesciences. With that, we'll wrap on this edition of Midcap Radar. As we do that, a small programming note. We prepare to ring in the festivities this Diwali. So tune into CNBC-TV18 at 2:30 p.m. today to hear how the biggest of market voices giving their tips on how you can make your portfolio prosper this festive season.